Porinju Veliyath is joining us right now. Porinju, good morning. Good to have you with us here. Prashant this side. I think you tweeted recently saying that the responsibility of trying to give support to the market is too heavy, so it won't sit well on your shoulders. So I'm just going to start with that on a slightly lighter note in what is otherwise a very grim situation in the market. What's your overall perspective, Porinju? What's really going on? And in the past you've said don't look at global, Greece, China, all of that, but that's essentially what is weighing down very heavily now.
In fact, it's not very heavily, Prashant. Of course, most of the participants in the market will be feeling very heavy because there was a huge run-up in the mid-cap and small-cap companies in the last many months, and a lot of those stocks have gone beyond values. So there is a huge correction. It was definitely required, and that's going on. Index-wise, it's okay. It has come down by a couple of 100 points, 300 points. That's okay. So in sympathy with the global markets. I want to tell you one thing. Nothing has changed significantly in the global economic environment in the last 1 week or 2 weeks. Do you agree with me? Nothing much.
Yeah, go on, Porinju.
Yeah, nothing.
Complete your point.
See, there is a slowdown in China, not only in China, because now people are focusing on China. Much earlier it had started in Europe and America. So there is a global slowdown, and this is a natural phenomenon. This happens when, it's a very simple, a common man's point of view, when more goods and services are offered than the demand. This happens. So it takes a couple of years or maybe more time to settle it, to absorb all those extra supply. Some of the supply will come down in commodities, in services, in products, in brands. So the global economic scenario is that it's going through that kind of a slowdown. We all are aware, except when the markets are not going down, people say India is in an advantageous position. It doesn't change even when the markets go down. India is definitely in a sweet spot in the given global environment. That position doesn't change according to the Sensex or Nifty going up and down. So please bear this thing in mind. Investors, this is the primary thing one has to bear in mind. And that doesn't mean you can be complacent, you can go and buy any stock at any price. In fact, if somebody noticed my Twitter account in the last 1 month, I have been using the word many times, be price sensitive. This was mostly with regard to the smaller companies, small and mid-cap companies, because I saw a lot of people, mostly traders in the market, tens of thousands of traders. They go on buying stocks and taking it to any kind of levels, 5 times, 10 times, most of the smaller companies. So that's definitely not a healthy situation, and that is the bigger issue today, not the Nifty or Sensex going down. I think Prashant will agree with me the way things happened yesterday, across the board, sell-off in the mid and small cap stocks. That is the major issue in the stock market today than the global issues and on which Nifty is going down a bit. Yeah, so that is the background in the market today.
You have been a big champion of mid-cap and small-cap stocks, right? Now, we can't generalize everything, but you've been saying that look there for value, look there for to make money. So how are you kind of separating the kind of stocks that you've been focusing on, you've been suggesting, talking about, discussing, and the view that there is a lot of froth and one needs to be very cautious in that space as well?
Yeah, at certain levels. See, since more than a year, I have been talking about, many times in the media I use the word non-FIA stocks before 2015. And exactly that is what has happened. People who were buying the FIAs or the larger companies which large investors have been buying into, very fancied stocks which are considered to be blue chips and safe stocks. Those people suffered in the 2015. And that time I have been talking, there's a lot of values in the mid cap and small caps, but selectively. So I was doing exactly the same thing last year. And that's perhaps I could give a return under the portfolio management, 51% return to all my investors in 2015. This is when the Nifty had gone down by something like 4 or 5%. So I'm just telling, not only me, a lot of people, individual investors have made maybe much better than me in the market in the last 1 year. But towards the end of 2015, by December, I was listening to many big fund managers and some experts. Now it is time to look at mid caps. Actually, it was the straight opposite. See, people, when 1 year a particular pattern of the market, happens, people say that is the pattern for the next 1 year. That's a very wrong way to. Maybe that's coming to an end. Exactly the same thing has happened in mid cap and small caps. But whatever said and done, Prashant, as you rightly told, you cannot generalize. We cannot generalize these things in the market. Stock picking is very special. There is no mid, small, large caps. I always recommend stock picking. But accidentally, it was like in my last 3 4 years, I was into mid cap and small caps because of the opportunity that's in the space.
Yeah, yeah. What is your broad? I spoke to somebody yesterday, and views. It just shows how views can change dramatically, diagonally, right? As I said that now risk reward for large caps is much better, and I think there is a point there as well, right? In a lot of sectors, smaller market cap companies are trading at a much larger, much higher valuation, P or otherwise, to large caps in the same sector. More than a few sectors now. So would you go that far?
Not that far, but I would say the valuation, there was a huge valuation gap in the last 5 6 years. Not only this last 1 year I'm talking about, between the large companies where FIAs and mutual funds have been buying and the other companies, thousands of other companies which are not fancied, except few companies, which are taken up by some fancied investors and operators. The majority of those stocks were having 2, 3, 5 Ps. Most of the good companies. Whereas the other side, we used to have 20, 30 and some fancied company at 40 and 50 Ps. So that was a huge unsustainable gap. I have tweeted it many times. Now that gap has come down, which also I have talked on the media. The gap has come down between the smaller caps and the large cap companies. So that's the time, it's an inflection point again. But see, the basic idea what I am trying to tell you, even within this smaller and mid cap segment, there are companies, still I am confident investors can create wealth in 2016. It has to be, one has to be very selective. The only thing, please don't get carried away because of the market movement, which may be artificially created by a group of operators or a group of investors. One should be price sensitive because this market is not going to run away anywhere in this kind of a global environment. That we have to keep it in mind. But if somebody very shrewdly monitor Indian stocks, Indian stock market and our economy in the given global environment, I am telling you, even 2016, you can make a lot of money. There are pockets of opportunities emerging. So, but for that one has to be light. If somebody is fully invested or over-invested or leveraged, there will be a problem.
Yeah. Do you agree when I say that there was a frenzied bubble type activity in a lot of undeserving stocks? At any point there is a bull market in some part of the market, right? But we got to a point where generally a large group of stocks was being driven up, operator driven or whatever. And these are cash shares, right? Being driven up 5, 10, 15% every day.
I agree, Prashant. Not only I agree, even I sometimes used to feel guilty whether I am also a part of this thing. Not really intentionally. I have had some experiences. I bought some stocks in my name or in my family member's name, some small companies which I found extremely value at 20 rupees something. In few months time it go to 70 and 80 rupees. So some people may be following my bulk deal name. So that's where I used to always tweet again, please be price sensitive. A stock which was good at 20 rupees, after 3 months or 4 months, it may not be good. It may be overpriced at 60, 70 rupees. Somebody buying a stock at 20 rupees in today's kind of environment, in investment environment, 20 going to 30 is a very big thing. But here in the smaller cap segment, in the last few months, people were believing, 20 rupees stock going to 30, it's only the beginning. It has to go to 40, 50 and 100. So that is too much of, I would say, bubble. So that has happened to hundreds of stocks, as Prashant is pointing out. That will get rectified in the depression in the market today, more than the index. I am not very bearish on the index at this point of time in Indian markets. I am bullish on India, and and in next 3 to 6 months, I won't be surprised. I had earlier made a statement, by March, Nifty may go to a new high. One cannot still rule out, but my confidence level is coming down on that statement. It can happen. 3 to 6 months time. Our indices, Nifty and Sensex, has potential to go to new highs, and global market can stabilize around here. Sell-off is, I understand, too much of leveraged positions globally, even in India. That getting settled, the panic happening, the sell-off, we can understand. Nothing wrong in that, and nothing unusual. This happens again and again in the stock markets.
Right. Okay, let me ask you, this is a general question, but I think many who are watching will be able to identify with it, right? Many are, they're not, their job is not full-time investing or trading. Or even if they are trying to do it, they're not experts at it. They don't have the kind of, research capability or backup or network or whatever. When markets fall quickly, many are left holding stocks in which they were making money, and suddenly in 3 or 4 days they're down very much. They're down 10, 15, 20, 25%, maybe even more. And these are not stocks where they bought because they had great fundamentals or they had great confidence or well researched. They were stocks that were, to use the word momentum, they were momentum stocks. They'd made money for them in the past and they were hoping to make some more. But now the markets have turned. What's your advice to people like that? Because I think a large part of retail investors would find themselves, direct investors, not through mutual funds, would find themselves in this exact situation. What's your advice to them? Even if you're down in these kind of names, take the loss and get out, or you think they should hold on, and be specific, Porinju. It depends on what in a way it's about the market itself. If the market suddenly sees a big up move, then these people might be able to get out at par or maybe higher. But if your view is there is further pressure, especially in momentum and mid caps and small caps, then they should take this loss and it won't turn into unlimited loss, a much larger loss from now. Go on.
Yeah, it's a very sad situation, Prashant. A lot of people casually buy stocks, and some of them are taking it as a full-time career, which is also another dangerous point, and it can be disappointing in life at times. And over a period of time, people doing this, just going excited with the market conditions and, getting carried away. And when there is a boom, they go on riding it without any, conservatism. So the suffering also comes. And if you see the past, I know a lot of people around me, small timers, and I know them, some of them, they trade for 5 years, 10 years, and some of them say, I have been trading for 30 years, I did not make money. This is not, a rare kind of sin in the market. I'm having a very large number of people involved in that kind of trading activity. Some of them,
Absolutely.
Some of them misunderstand that. Some of them misunderstand that they are investors just because that they took delivery and held it for a month. That is not investment. So but at the same time, it's very difficult to give an advice. Okay, you sell it and book loss or book profit, or at par you sell it off, because each stock has got its own identity. I can tell you a general principle in this thing, when you hold a stock, understand you own that company. You, owner of a company, what all things the owner of a company should know about the company, he should be knowing all those things. Then only he should hold a stock. If that kind of...
That is the ideal situation, Porinju, that is the ideal situation, right? But we know that that's not the reality rather. I mean, we'd like it to be, but that's not the reality. My question was, do you see mid caps, momentum, small caps, those kind of names to be under pressure, continue to be under pressure, or do you expect a sharp rebound?
No, I don't expect a sharp rebound in that sector in general. There can be some companies really going up into new highs. Even today, yesterday also there was a new high in my personal holdings. So what I'm trying to tell you, you cannot generalize here. It is practically not possible, Prashant. But I understand your question. From that perspective, I can tell you it will not make a big bounce. It can remain weak for some time, and during while a lot of stocks can even go down by 30-40%. Some of them can go down by 60-80%. We have seen this thing in the past, in 2011 and 12.
That's the answer. That's the answer I was looking for. I think you answered it. I think, and that's useful. Sometimes it's just okay to take a loss and get out rather than watch the loss grow bigger and bigger. Let's just take a very quick break. Porinju, stay with us. I just want to come back to some specifics on the other side, specific stocks that is. Back in two. Okay, on a lighter note, having Porinju on air seems to be supporting the market. We are at the day's high, by the way, 50 points lower, but at the day's high. That's a lighter note comment. But Porinju is with us, and we've been talking markets, general psychology, and what should be the strategy. Let's talk about specifics now, Porinju. Now, what is? Let's just revise. I mean, actually, people follow you very closely. I was looking at my Twitter feed, and I've got more than a few messages asking me to ask you about specific stocks. So obviously, these are people who own these stocks after you bought them or you recommended them. So I'm just going to ask you to run us through your portfolio, what you own, what you hold. You did in the last segment say that you find value is emerging in a lot of areas. Just take us through that.
Acha, you're asking me? You're asking for specific stocks?
Yes,
Prashant?
yes, I am. Yes, I am.
Okay. In fact, Prashant, the stocks which I have been buying, it's like an open book. Most investors know what I have been buying. I have been talking in the last couple of months, a small shift, a small exposure in the larger cap companies. That's perhaps the reason it's famous that I bought into Biocon recently, one stock. As a New Year thing, in December I started buying it. So this is basically, I have been expecting a meltdown in the smaller cap companies. So I have been gradually shifting into some larger companies. I would say large mid cap, and large mid cap for me is like a large cap. So Biocon is a stock which we have been buying, and I think that was one of the discussions in the media. Now, Prashant, are you asking me to recommend stocks or what is it? I didn't really get it.
No, I'm asking you to just we've been chatting and we've been just looking at your portfolio and what you've been doing and the kind of stocks you've been buying. Can you first just go through stocks where you book profits, where you've gotten out, where you've exited over the last, say, 2 months, 3 months?
Yeah,
let's just begin there, and then we can talk about new ideas. Yes, stocks we've discussed over the last 1 year, and where you booked out. Yes.
I hope you are basically indicating about my portfolio management, which is my main activity. Perhaps the only activity other than some of my small investing and trading. So in which we have created wealth as we discussed earlier in 2015. NIT was one of the major stocks which we have been recommending on this channel also, from 35-40 rupees. We are still holding on to that stock. We have been sold. The stocks which created wealth and we exited is one is Force Motors, Shreyas Shipping and Logistics, and a couple of other stocks we have booked profit in 2015. So, and we have been buying into stocks like NIT again, the TCI, HSIL, Hindustan Sanitary Ware, and now latest Biocon. There are many stocks we can't talk all the stocks. I would like to look at request investors to look at Hindustan Sanitary Ware, HSIL. The stock has come down to 270-75, below 2,000 crores kind of a market capitalization. So I am looking at stocks basically in India. What can create wealth in the future environment? What we are going to have. The current government has got a vision, a long-term vision, and a focus on certain things. And government is planning to spend huge money on some of those big vision programs, like the defense or the railways, the roads, a lot of things. The shipping. So which companies are going to benefit out of this future government action, which can be very large by scale and size? So that is one space I am looking at. Another space, now in the given economic environment, the commodity prices are coming down, they are really crashing. Nobody could ever imagine about a $30 for Brent crude and the steel, aluminum, copper, anything. So which companies in India are placed to take advantage of these low commodity prices? So these are the kind of themes one should work on. That creativity can lead into wealth creation in 2016. So I'm not very comfortable. One stock I have been looking at was Idea. It's a stock is at new low, 117 rupees today, around 40,000 crores kind of a market capitalization. There is a lot of negative apprehensions like Reliance Jio is coming. They may take away all the market share, and the voice business is going to come down, decline significantly. So all those negatives are factored in at this price. I think Idea will be one company which can survive with all these things. There can be some slowdown in earnings, but at 12 PE, 11, 12 price earning multiples, I think this is not a stock to write off. The one major problem for investors to look into stocks, there are a lot of challenges like never before. It is too dynamic a space today when you talk about equity investing. One has to be really smart, really conservative, and you have to be very intelligently look for opportunities, and those pockets of, and I tell you one more thing. See, if there is opportunities in equity market anywhere in the world, that's in India. Because we have many themes going forward, which are the part of long-term vision of the government, the current government. They are in the right direction. They are doing an excellent job with all the problems and advantages in place. I think if we can even progress significantly without big global economic growth. So that is the advantage India has today, which can be shared by the equity investors in a relevant way. So for that, I have to again repeat, you have to keep your eyes and ears open, look at the pockets of opportunities, be sober. There is no hurry to buy stocks to make money. You can be sober. A stock you are identifying at 100 rupees, which is a very good value. Maybe you may get it at 90 and 80 rupees when things are bad around, especially in the smaller and mid caps. Now there's a meltdown happening. Even some very good stocks which are already valued at today's price can come down by 15, 20 or 30%. So that makes a bigger value. The margin of safety really go up. So you can make a lot of money in 2016. That will be another pocket of opportunity.
Right. You said look at companies benefiting from the commodity price collapse. There are various ways to do it, but any specific names come to mind?
I don't today. I don't want to talk too many names. So this, I think I almost recommended these two stocks. Hindustan Sanitaryware, it's not any commodity play. Of course, that's also important. The raw material prices are going down. Now somebody can even look at VIP, it's a stock. They have 60% raw material cost in the production. So the raw material cost is coming down. Maybe the final, many companies, many consumer products companies, even though the raw material prices have come down significantly in the past, they haven't brought down, they haven't bring down the price of the final product. So you can see some significant growth in earnings in some of these companies. So there are different themes, So these are not my monopoly or anybody's monopoly. People can think individually and identify such themes and look at values.
Just a few quick fire round. You still own Tata Global? You're still very bullish? Tata Global Beverages?
Yeah, I'm very bullish still.
Om Metals, Simplex Projects, those names?
Yeah, I'm holding both.
DLF?
They're steady at these levels. Yes, Prashant?
DLF? Porinju, DLF?
No. DLF, I told last time, no, we had sold it off earlier.
Which is your biggest holding, by the way, right now in the portfolio? Single largest?
FCEL, Future Consumer Enterprises.
Future Consumer Enterprises. FCEL, right?
Do you have permission from SEBI to ask all these questions to me?
I want to ask them for permission, Porinju. Now that you... Actually, I have permission to ask, I think. But most people shy away from answering the questions. But I think we had a fruitful chat. Thank you very much for coming on. Good getting that perspective. And always a pleasure. Porinju Veliyath there, joining
Thank
us
you,
on a
sir.
Skype link today. Thank you. Thanks indeed.